Welcome back to Morning Trade Live. It's time now for the chart master. Alex Coffey will take us through the fundamentals and Kevin Green will go through the technicals today. All right, first up, we've got Oracle. We've got earnings Tuesday post-market. What are you seeing ahead of that report card there, Alex?
Yeah, going through some of the expectations, Sam, on Oracle, one of the final big tech. I feel like we've been saying that every week, but really next week's really getting close to the end of this earnings season. But Oracle looking for adjusted EPS in the $1.47 range. That would represent, mid-single digits year-over-year growth. Let's think something like 6%. Revenue, $15.01 billion. So that would be close to, let's call it, 13%, a little bit less, maybe 12.5%. And so when you think about this company, obviously it's been a nice performer in terms of stock price, but it's not growing at the same clip of some of these other names, particularly in the semiconductor world, where we're talking upwards of, 40, 50% year-over-year growth in some cases. Cloud services, of course, is going to be the critical component of this particular business, in which you're going to look for somewhere around 12.2 of that $15.01 billion. Analysts are largely in the buy camp or the bullish camp for this one. 2-to-1 outweighing the holds, no sells, based off the 46 analysts compiled by Bloomberg. If you took 36 of them and you made an analyst consensus 12-month price target, it's almost exactly 250. So that would imply about 10% upside from current share prices.
All right, so some optimism heading into this report, sitting up almost 2% in what is otherwise a down market now, today, up over 35% year to date. Kevin, what do you see on the technical side of things?
Yeah, for Oracle, you are seeing a little bit of a bull flag pattern, and we actually have seen a lot of volatility in this name over the last year. This time last year, we were seeing a little bit of an uptrend, and then we started seeing a breakdown. And this stock also correlated with all of the other equities within the market. Around February, we saw a pull down just across the board here. We saw a little bit of a double bottom pattern back in April, hitting that 122 level, and we've been moving to the upside ever since. Now, the stock did hit around $260, and it did consolidate for a significant amount of time, but now we are pulling back. And now this pullback is something that is, it's okay, especially in a bull trend here, but you don't want to actually stay in this pullback for too long. And right now we're actually testing, or we were testing, the upper end of this channel, this yellow channel here of this flag. And what you would like to see if you're a bull is actually breaking out above that, recapturing the 20-day moving average, which is in blue, and then trying to retest the $258 level. Any type of further breakdown, you're looking at the 200-day moving average at around $183, and then the volume point of control at $168. RSI is in a bearish formation where we are making lower highs as well as lower lows. In fact, we had a bearish divergence that is now correcting itself at the moment. And MACD is in a bearish formation with the 12 EMA below the 26 EMA, but that 12 EMA is starting to stall out here a bit. So if you're a bull, you'd like to see it stall out, starting to hinge up. That blue line at that bottom indicator, cross above that 26 moving average, and that would kind of give you that signal that the stock is ready to kind of run back to the upside. So it's a decent chart. It's just a pullback for right now, but if you break those critical areas of support, that's when you would get a little bit more concerned about this name.
Okay, and next up is Adobe. We're also going to be hearing from that company with its earnings out on Thursday. What are the expectations there, Alex? Because, a lot of the conversations tend to be around Adobe with respect to other companies sort of eating their lunch with respect to artificial intelligence. So what are you seeing?
Yeah, it's a good point, Sam. This is really a company that's been disrupted quite a bit within a space that it's been best in class in from a software standpoint for decades. So in sort of these creative digital media worlds, AI has really quickly made its mark in sort of one of its early applications. And what that's meant is revenue is slowly but surely starting to decline in terms of its pace of growth. Looking for, in this case, around 9% year-over-year growth, $5.9 billion on adjusted EPS per share here, around $5.17. On the earnings front, that's a little bit better number, probably closer to 11% year-over-year growth. So, a little bit of a deceleration on that front, but still, double-digit growth. Digital media expected to grow around 10%. Digital experience also expected to grow, but at around 8%. From a smaller segment, publishing and advertising expected to decline about 8%, but Of the most important segments, by far that number comes from digital media, which is still growing at a healthy clip around 10%. On an analyst front, this is still a company that is preferred by analysts, but there are a few more doubters than maybe in the case of Oracle. It's still about a 2-to-1 ratio between buys and holds, but there are about 5%, the balance of which are in the sell camp, including Rothschild as well as Milius Research. If you took 34 analysts and made a price target based off of them, it'd be close to 483 on a consensus. So quite a bit of potential upside priced in here. Over the last year, the stock is down, as Kevin will go through, almost 40%. And that's essentially what that consensus price target is looking for, is kind of getting back to where it was about a year ago from today.
Yeah, and it's interesting because it's up today because it is a particularly large component of software application, which is up broadly. And, you and I were discussing about that sort of software semi-spread earlier today, Kevin. What are you seeing on the chart for Adobe?
Yeah, obviously this stock has been breaking down over the last year, and Alex is right, down about 40% from the highs. And really what you want to see is kind of recapturing maybe some of these areas of support, or former areas of resistance now going to be, or former areas of support now turning into resistance here. But you can see this time last year we had this breakdown, we consolidated, tried to break higher, broke down again, consolidate, try to break higher, broke down again. But what's actually very interesting about this chart is that 330 level has been an area of support here. You could actually call this a triple bottom. And the recent one that we actually had yesterday, that candle was a hammer candle off of those lows, finishing at those highs here. That's actually bullish, but you are testing that 20-day moving average. We were above that about 30 minutes ago. Now we're below it again. Obviously, the equity market is pulling back here a little bit. So the first area of resistance, 20-day moving average. The next one is kind of this trend line to the downside. You're looking at around $381, and then you're looking at the 200-day moving average. RSI maybe trying to form a bottom here, so that could be a little bit bullish, but the MACD still not giving us a full-on bullish signal. This is going to be a stock that has to prove its worth by its price action, especially post earnings here, because the trend right now is still to the downside. And in order for that to really change, you got to recapture this 420-ish area to the upside in order for sentiment probably to shift for Adobe.
Okay, and next up, last but not least, Chewy. We're going to be hearing from this company pre-market on Wednesday. What are the expectations, Alex?
Yeah, that's an interesting one. Adjusted EPS expected around 33 cents on just over $3 billion in revenue. But of course, Chewy scrutinized for other metrics as well, like active customers, which are expected to come in the 20.829 million range. So that would represent about a 4% year-over-year growth rate, and net adds of about 175,000. When you look at this particular company, another metric that's important is sales per active customer. So sort of how they're monetizing that base. It's been relatively stable, but increasing in the low single-digit percentage range, and it's expected to do so once again, expected to increase around 4.4%. So all of that to be said, if they're able to maintain margins, continue on their trajectory of growing customers, but also growing how much money those customers are spending, if it hits its numbers, expected to grow earnings by about 33%. And almost 8% for revenue. Analysts, again, like this name, but maybe to a lesser extent, about 60% in the buy camp, about 40% in the hold camp. Consensus price target using 24 analysts is around $45.75, implying about 10% upside from the current share price.
Okay. And just quickly on this one, Kevin, your thoughts on the technicals?
Yeah, the stock is still in an uptrend here. If you look at this time last year, if you took a resistance line and put it at the highs, it was pretty much tracking that all the way up until that $48 level. Kind of broke out, and then we did see a re-rating back lower post earnings, failing that 20-day moving average, hitting the 200-day moving average. Stood there, we were there for about maybe 5 trading sessions, and then we were able to recapture the 200 as well as the 20-day, which is good. Now we are consolidating and trying to break out a little bit higher here. First area of resistance, $43.70. Next area is to try to fill that gap and move a little bit higher here at $47.50. And any further breakdown, leverage the 20-day moving average, the 200-day moving average, and then also the volume point of control, which is sitting at around $33 right now. RSI is still in a bearish formation, making lower highs. So we're kind of at that critical juncture where we are seeing RSI hit that resistance area. MACD is actually still in a bullish formation here. So cautiously optimistic. We're still making higher lows for this name. Primary trend is still to the upside.
Okay, mark your calendars. Oracle Tuesday, Chewy Wednesday, Adobe Thursday. Thank you so much, Alex Coffey and Kevin Green.